Welcome back to episode 78 of the What Do We Do podcast. Today, I'm going to tell you how to fight inflation and win. It's going to be a great show, so let's go.
Welcome to What Do We Do? A podcast discussing wealth management and financial planning featuring key leaders in our communities. Hosted by founder and CEO of Great Lakes Wealth, Dewey Stephan. Tune in to hear how you can plan for and live your best life.
Hey, everyone out there in YouTube land and podcast nation. Thanks for tuning in to another episode of the What Do We Do podcast. And on today's show, I'm going to tell you how to fight inflation and win. Before I get into it, I'd like to thank you for tuning in and remind you to hit the subscribe button, the like button, leave a comment, tell your friends and family. As we always say, as a community, together, everyone achieves more. Okay, so to start with, let's define what inflation actually is. In economics, inflation is defined as an increase in the general price level of goods and services in an economy. And when the price levels go up, each unit of currency buys fewer goods and services. This is called a reduction in purchasing power of money. And to help us figure out where we stand with inflation, there is an inflation rate to help us monitor and evaluate. The common benchmark for monitoring inflation is the CPI, the Consumer Price Index. Currently, it's right around 6.4%. A year ago, it was right around 2.4%. So that's a very significant change year over year. So we'll use the number 6.4 to determine where we may be going later or where things have been relative to current conditions. And today's show is not about the details of inflation and determining where inflation's going, but rather how to fight high inflation regardless of where inflation is going. As I mentioned, the rate of inflation, according to CPI, is currently 6.4%, and that's the highest that it's been in over 20 years. And it's expected to go higher. So what do we do in an environment where prices are going higher and everything else in our world is basically staying the same? The first thing you need to do is make a budget and stick to it, period. As we always say, if you fail to plan, you plan to fail. And with the cost of goods and services going up, you need your budget to understand how much you can afford per month, per quarter, or per year to live within your means. After you have your budget, then you definitely need to have your emergency funds set aside, just in case there's a recession, just in case you get laid off, just in case the dollars associated with your budget aren't coming in like they once were. You have your emergency fund to protect you in the short term. Next, you need to cut back on non-essentials or non-necessities. We call this tightening your belt a little bit. We call this living a little bit more frugal during the times when inflation is high and your wages are the same. So what does that mean, cutting back on non-essentials or non-necessities? Well, when you go to the grocery store, maybe you go for the white label or the generic options that are available. Also, maybe you reduce or eliminate shopping for non-essential items like some clothing or other consumer discretionary items. We use the word discretionary because they're not required. So reduce or eliminate non-essential items on your monthly budget. Additionally, find all sorts of ways to reduce your costs to reduce your budget. Next would be dealing with debt or deleting your debt. As we talked about in prior episodes, when inflation is high, the Fed typically raises interest rates to combat this high inflation. Well, what happens is the debt on variable obligations goes up as well. So your credit cards may have been 14.99. Maybe they were 19.99. Well, there might be now 29.99. So don't just deal with them. How about we delete them? As I've said before, what's the easiest way to make 29.99%? Pay off that 29.99% credit card. And next up would be investing, okay? Have a solid plan for the short term and the long term. And go back and look at episode 77 where we discuss investing in this current environment. We say that your investments need to be focused on inflation. So bonds are back, but what kind of bonds? How about these bonds called TIPS? Treasury Inflation Protected Securities. TIPS. These are government bonds that are adjusted for inflation. So those are something to consider. We talked before about money markets. When the Fed raises rates, those rates also adjust in short order. They're not fixed. They will adjust. So those money market and savings accounts will adjust higher. Next up would be gold. I think everyone listening to the podcast over the last 3 years would know that I've said repeatedly that gold is known as one of the best hedges of inflation out there. Gold is currently trading right around $1,800 US an ounce, and there are targets out there of anywhere from $2,300 to $3,000 to as high as even $5,000 US per ounce. I'm not saying it's going to get that high, but I will tell you that gold is historically a very strong hedge against inflation. Another investment similar to gold would just be your raw commodities. This could be oil. This could be other energy like natural gas. This could also be beef or chicken, could be fruits and vegetables. And the reason these are good investments in an inflationary environment is because if the price of beef goes up and the price of chicken goes up, if you own beef or you own chicken, then you'll be keeping up with the higher cost of these goods. Well, how do you invest in beef and chicken or oil and natural gas, etc.? Either look for mutual funds or ETFs, perhaps individual securities, but this is a great reminder to talk to your financial professional, do your research, understand what options are available to you and which ones might be the best fit for you as well. Another opportunity would be with real estate. Real estate is also known historically as a great hedge against inflation. And why would that be? Well, with real estate, there is rent. And so in a world where there is inflation or higher prices, then rents go up. Well, if you own the property and you have tenants and you raise their rent, but your costs are fixed because you have a fixed mortgage, maybe no mortgage, then as inflation goes up, you can raise your rents, and so you are keeping up with the pace of inflation. And guess what else? If you happen to own the property, well, when rates go up and real estate values go up, maybe the purchase price of your property would also go up, so you can now have higher income coming in and higher appreciation on your investment. I'd call that the double dip. And last but certainly not least, the best, in my opinion, the best option for keeping up with the pace of inflation is investing in stocks. Stocks do involve high degrees of risk from time to time, but also rewards most of the time. And in an inflationary time, which we're in right now, stocks, which basically if you purchase, you become an owner in that company. If they pass on the higher input costs that they have to the consumer, i.e. raising their prices, well, you as an owner of the company benefit in that increased cost as well. The example that I always give is with gas at the pump. If gas goes from $4 a gallon to $5 a gallon, and so you have to pay from $40 to fill up your tank to $50 to fill up your tank, hey, why don't you own stock in the oil company that's charging that higher per gallon cost? And that way, when they pay you your quarterly dividend or that stock goes up over time to keep up with the pace of inflation, you might have paid more at the pump, but you also made more as an owner of the company. Now, it's not just that easy all the time. So please talk to your investment professional, do your research, understand the risks of investing in stocks in the short term, as well as all of these options for fighting inflation. But in the long term, these are absolutely the best ideas out there to invest for success in inflationary times. Okay, so the bottom line, inflation makes your basic living expenses, your housing, your energy, food, transportation, it makes it all more expensive. So either make more money or spend less money. It's that simple. Thanks for tuning in to another episode of the What Do We Do podcast. And make sure to follow us and subscribe to our channel to always get the latest information and updates available. And as I always say, live your best life, be radically generous, a great big booyah to ya. And this is episode 78, How to Fight Inflation and Win. And we're just getting started.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.